What's going on, guys? Ace Alfala here, CEO and founder of FMO Media. We have Brandon on today's podcast with MortgageRight. Brandon, why don't we take the next 2-3 minutes and maybe just introduce yourself and talk to us a little bit about what MortgageRight is all about?
Yeah, thanks so much for having me, Ace, and I really appreciate being here. So yeah, Brandon Kohlberg. I've been in the mortgage business for 18 years. 18 years of just referral-based business in the greater Charlotte area. I got in the business back, shortly after college. I had a buddy of mine that got into the mortgage business, and he's just one of those guys that everything he does well. And he was talking it up. I thought I would end up in the financial markets and move to Charlotte, kind of thinking that. And with that kind of background of him kind of prodding and say, hey, come join me in the mortgage business. So I actually took an interview in the mortgage business, got my first job, and kind of stormed out of the gate. Had a great first month, and 18 years later, still doing it. So
that's it. He got you locked in.
Yeah, pretty much.
Why don't we just because you brought that up and I'm thinking about it, a lot of guys are coming out of their best year ever last year, and a lot of loan officers kicking butt, and I think a lot of people could see that or see you, Brandon, being successful and saying, well, I want to be a loan officer too, right? So, and they may be getting in their first year. What's maybe just a quick piece of advice, or maybe if you could rewind back time and go back 18 years, what would you tell yourself to kind of prepare yourself for the first 2-3 years in the industry?
Well, you're definitely right. A lot of new people have entered the business over the last few years, and the advice that I give myself, which is kind of what I'd give them as well right now, is really become an expert in the mortgage industry. Find a few things that you can do and do well and continue to grow and excel in, and just take those few things, whether it be understanding the guidelines and how to put a mortgage transaction together, because it's not rocket science, right? But it's actually pretty involved, and there's a lot that goes into it. There's so many different layers, and so pick a few of those things and really become an expert at it. And for the other things, maybe hire great people and make sure you're surrounding yourself with great people. Second of all would just be to develop and maintain just a very strong database. People that eventually clients, past clients, those types of things, and never let go of your database. Probably my biggest failure in the mortgage business was not understanding the power of that database early on. So the first decade, it was just I closed thousands of transactions and helped thousands of families purchase homes and things like that, and I did a not a good job of maintaining that database so that continually to follow up with those families. Obviously, you don't just buy one house, and that's it. I've been doing it for 18 years, so the people that I helped purchase a home, and in 2004 when I got in the business, they've probably bought and sold multiple homes and multiple refinances, and had I done a better job of understanding, that from a career perspective, I could have done, even much more business at that point. So those are the two top things I'd give tell myself back then and tell new people getting in business now.
That's a great piece of advice, because I would imagine, just hitting the right network to like that one person who then refers you to everybody.
Absolutely. Yeah. Network is just huge. I mean, we're in the referral-based business. And so, you've got to, you got to provide phenomenal service. You've got to make sure that you are an expert in what you're doing, but having that database and continue to network with that is paramount.
It's huge. And I was doing the math. I was like, 18 years. So you've seen the market go up and down. You got started right before the big crash, right?
Yeah, I got started in kind of the middle of that original refi boom, so much so that, when back in 2004, clients would call me, hey, looking at a refinance, what can you do? And at that time I was like, hey, on a 30-year fix right now, I can get you down to 5.75. And they were ecstatic. It was, 5.75 was unheard of. They were thrilled. And of course, now over the past few years, you tell someone, hey, I can do 3%. They're like, can't you do lower?
Spoiled,
we've all been spoiled, right? Now, in 2022, here we are, rates back up, around 5.75 again, kind of right where I started. So historically pretty good. But yeah, certainly back in 2004, that original refi boom, going into, of course, the subprime loans, the Alt-A is kind of what really kind of spiked some issues. But working through the mortgage crisis, the roller coaster of that, not only from a business standpoint, but from a personal standpoint, professional and personal, to kind of go through something like that. And have your business disrupted like it was, and for everybody almost at the time. So to kind of come through that, and then to weather the storm of the markets for the past 18 years, I've kind of seen it all and kind of done it all, and thank goodness, here I am still standing. So it's good.
Well, that's awesome. And let's bring around to, I know a popular conversation right now is like, what's happening right now in the market? Like what's your opinion? I know nobody has a crystal ball, right? But
Sure.
where do you think the market's going as far as are the interest rates going to continue to go up? Are we going to kind of plateau where we're at? What do you foresee happening?
Yeah, like you said, if we all had a crystal ball, we'd be maybe we'd be doing mortgages. But certainly with inflation, inflation's been on the horizon, seems like, for a very, very long time, certainly for a number of years, and we had never really hit it. And then of course, COVID hits, and then we just begin printing money like there's no consequence, right? And so now, of course, we're experiencing the consequence of that. Gas is almost triple what it was, a year ago. The price of meat is over double, and certainly the mortgage rates have doubled since January 1 of this year. So we've just seen an incredibly steep incline on really all things, and including mortgage interest rates. Now, of course, something to offset that was that home prices have also gone substantially higher, which has been a good benefit. But from a forecasting standpoint, I don't think we're at the peak just yet. I think we'll have some certainly a slower incline of what we've seen over the past 5 months, and we've just seen historically rapid increases in mortgage rates, and I think that will slow down significantly. But we're still going to see a little bit of a trend upward, probably to the tune of maybe rates get around the par rate for your standard conventional 30-year fixed, probably going to get it to about 6.5%. And then kind of taper off. And I think we'll hover around there, quite frankly, a little ebbs and flows, ups and downs over the next few years. And then we could see, in late 2024, 2025, we could actually see a pullback in rates at that point. But jury's out for sure. But even if we're at 6.5, it's still, when you look at the historical context of mortgage rates and that type of thing, still very affordable, still beats the heck out of renting. It's the shock, right? When you tell someone right now, or maybe a couple months ago, hey, your rate's 5%, it was such a shock that it didn't start with a 3 or maybe even a 2. And so now that people are are now more aware, now it's okay, right? And so it was that initial shock though that was really kind of throwing people off. But now they're accustomed and they're kind of aware that rates have gone a good bit higher, as well as everything else, right? So that shock is gone. I think we'll see a little bit more of an incline through the rest of the year, and then kind of relatively taper off. So,
and what would you say, Brandon, right now? What's kind of like your because it's all different parts of the country. So I love asking people,
sure.
like, I don't want to ask what's your ideal customer, right? Because it's kind of like you can work with anybody and everybody, but like
right.
what's your most common customer? Because your customer may change, right? And ebbs and flows of what are you kind of seeing right now? People coming to you the most.
Yes. So obviously there's been a big push away from kind of the government loans, just because it has been a seller's market, and there's this connotation, albeit I believe a wrong connotation, that a conventional loan is just so much better than your FHA your loan or your VA loan or something like that. And I'd like to say, at least point out specifically VA loans right now. I would actively encourage every seller, hey, if you get a VA loan offer versus conventional, take the VA, help our veterans out. you know, they've done enough. They don't need to be punished for doing a VA loan. A VA loan is much better than conventional, if you ask me, for the buyer, you know. So yeah, so certainly there's been a big push to go conventional, and that's, you know, kind of pushed maybe some of those some home buyers who maybe a little bit less of a down payment, or maybe not your A+ credit scores, right, tend to go towards, you know, FHA loan because they get a better deal, quite frankly, with an FHA loan. Doesn't mean they can't get approved for conventional, but they could get you know, a better deal with an FHA loan if they've got, you know, like your mid 600 credit score, something like that. So they have been kind of pushed, you know, towards conventional, but you know, we do mainly a majority of conventional rather, but still do lots of FHAs and VAs, even USDAs in our more rural areas of South Carolina and parts of North Carolina. So, you know, still doing a good bit, but of course, there has been a push towards the conventional side of the mortgage business recently.
Now, for the you know, for the general listener listening in who maybe doesn't know much, a lot of people are moving down from up north, right, to the Carolinas, right, including myself. I moved here a year ago, right? So I probably had about 15 of my friends move down here since I've been down. And I started to realize how many people, because they live in New York and they've been renting their whole life, have no idea how anything you do makes any sense, right? They never heard of FHA, they never heard of any of this stuff. So here I am explaining this to them. So for somebody maybe listening maybe they're in a major city, they're thinking about moving down south from up north. Can you just explain like what is that product look for? Maybe I'm the guy with the 600 credit score or 620, and I lost my job during COVID, and I've only been back on 12 months because there's a big part of the market that's who they are. Can you just explain that to like the product, the way it's designed? Like, how do you qualify to buy a house with a 580 or 600? That sounds crazy to the average person. You know?
Yeah, and those are very real world scenarios, right? And I'd like to throw a plug for, you know, the greater Charlotte area too before I answer that, like because like you said, you moved down, 15 of your friends moved down. I started in this business 18 years ago, and for the, you know, first substantial majority of that time, you know, the greater Charlotte area was kind of more of like seen as a regional player, right? So, you know, people in Atlanta and, you know, maybe up to Philadelphia kind of knew about the Charlotte area. And so we'd see some influx around, you know, more of a regional, right? And now we're, you know, we get so many new buyers moving from New York, New Jersey, Washington, you know, different parts of, you know, Oregon and Northern California and really everywhere. So Charlotte's just a great place to move to. So plug that. And so, but yeah, so for people who don't do this every day, and of course, if you're not in the business, you're not doing it every day. And even if you bought a couple homes over the last, you know, decade, things changed so much in the mortgage business, especially, you know, because of COVID. You know, we had so many guideline changes and things like this, but it's hard to kind of maybe break those scenarios down. But, you know, typically, I think there's a misnomer that FHA is for just first-time home buyers. It's not. It can be, you know, you could have bought, you know, 4 houses over the last, you know, 8 years and still get an FHA loan today. It is for a primary residence, but yeah. So if you're putting less than 20% down, of course, there's always going to have more. You're going to have mortgage insurance on that loan, and so mortgage insurance is priced by the loan to value ratio, how much you're putting down, credit score, and believe it or not, even your debt to income ratio. And so there's a big kind of perspective to look at when you're comparing loans. So if you want to do 5% down and maybe you've got a 660 credit score, you know, FHA is going to be significantly less expensive than a conventional loan. Does it make it a worse loan than conventional? No, I would argue it makes it a better loan than conventional. It's going to be, you know, insured by the federal government, which is the nature of being a government loan. And so thus, because of that, your mortgage insurance is going to be less expensive. Most likely your interest rate is going to be less expensive. On the flip side, if you've got, you know, a 750 credit score and you want to put 5% down, well, conventional is going to be a better deal for you. So credit score, debt to income ratio, those are things that really do come into play when analyzing and comparing different loan options that you may qualify for. And most people, you know, they're going to qualify for both. And so it's really about discussing and going over different options with your mortgage advisor to say, hey, you know, what's the best option for me? And then, of course, obviously over the last few years in this crazy hot market that we've been in, it's also been a part of, hey, how can I make my offer look the strongest so I get picked over, you know, all these other multiple offers. And a lot of times that was sacrificing maybe a better deal to get an FHA loan for a better deal, and being steered towards, okay, I need to get approved conventional, because this seller has this connotation that a conventional loan's, you know, that much better than FHA. Again, I would probably disagree with that and say there's really not much difference at all. But that's been kind of what we've experienced. So, but again, it's kind of hard to maybe break all the nuances down. And I would just say, you know, if you're thinking about that, you know, call your mortgage guy or gal, call me. Of course, I'm a little bit biased towards myself, so definitely call me. But you know, that's where I'd go with that for sure.
That's a great answer, because there's always a million scenarios
For sure.
Depending when you get on the phone. And this is a selfish question I want to ask you, just because, again, I said I had a bunch of people move down here about a year ago. You know, a couple of my friends, a couple of people, you know, they bought the house, they moved down in a rush, they're here, and they want to pick up a second home. Maybe a person, maybe someone moved to Charlotte, now they want to move to get a second home in Charleston, or something on the beach or something like that. What would be their options? You know, can they do a second FHA? Do they have to put 20% down because it's a second residence? You know, like, what would be the breakdown? It's over 100 miles, right? Because could it be considered a vacation home? Can you talk to some of the people who maybe they're doing well and they want to know what their options are, and they maybe don't want to get rid of their house?
Yeah, great question. And I throw out that, you know, ever since I got in the business 18 years ago, you know, I've been, you know, fast forward 2 years after that. So I've been an avid real estate investor myself for the last 16 years. I actually just bought myself a beach house in December, outside of Charleston. So I can, you know, speak, you know, pretty educatedly about that and say that, again, a very real world scenario. So many people right now, because of COVID, you know, have looked to buy those, you know, a second home, a getaway place. And you know, when they're not there, they can rent it out, things like that, and actually generate some cash flow. So that's been a good bit of our business, you know, over the last year and a half, and that second home market is definitely growing. And so with a second home, 10% down is the minimum. So you can definitely get a beach home or, you know, vacation home, anything like that for, you know, with 10% down. And so makes it pretty feasible for, you know, for a certain amount of people out there. And again, there's the opportunity to also rent it out when you're not using it, you know, as your vacation home. You can allow other people and generate some cash flow. So just one other way to actually build wealth in real estate, which, you know, again, I'm a big fan of and proponent of building wealth through real estate. But the second home market, it has been hot. You're obviously, you know, near the beach in North Carolina, and so you probably see it a good bit too. And again, starts just with a conversation with your mortgage advisor. But yeah, 10% down, and you can probably get qualified.
Yeah, the Airbnb market, right, is massive right
for
now.
Sure. And you know, and it's worth noting too that there's been some recent changes in the guidelines with that, because, you know, obviously Airbnb is a fairly new trend, right, and a new phenomenon. And so from a mortgage guideline perspective, you know, we look at tax returns and like 12-month lease agreements to give you credit for that rental income. And so some people over the past few years who have been Airbnb a property, well, on the mortgage side of qualifying, we haven't been able to give them credit for all that rental income that they're creating, because of how the guidelines were written and things like that. But now we're kind of opening that up and kind of rewriting some guidelines to accept, you know, those weekly and even nightly rentals, as long as there's a decent history of it. Whereas, you know, that was unheard of. So that's also, we're kind of catching up to the times, right? We're in an ever-changing environment of guidelines and economics and things like that. So the mortgage industry is always going to be trying to play catch up, but in that scenario, we're actually, catching up, which is good.
So that makes sense, and that's good, because a lot of, like I said, a lot of people are in that area where they have some wealth and they may want to buy the house, or they're looking at Airbnb. They're like, hey, how do I do it? How does that make sense? So definitely reach out to Brandon if you're thinking about any of that. Walk you through it. Shifting gears real quick, Brandon, obviously us being a marketing company and us doing your marketing, why don't we talk about a little bit on the digital side, maybe just how you've kind of seen the industry change a little bit, the marketing times, and kind of where we're at today, where you think we're going, how you see it impacting just loans in general, or just people kind of, knowing who people are today.
Yeah, for sure. So, I like to think I'm the best, right? And so I do believe I'm an expert in all things mortgage, from the origination, from loan structuring to understanding guidelines and how to put deals together, because again, it's very nuanced. Income is not necessarily mortgage qualifying income. Being able to pour through those and make heads and tails of documents and things like that really is something that you have to be an expert in. And so but with that, I also have to know that it's not about being the best, right? The marketing is not being the best, it's being the most well-known. And right now, and for the past number of years, how do you become well-known? You do great in business and you get the word out, but social media and digital media play the largest role in that. And I mean, you have an opportunity now where that just didn't exist, not too long ago. Certainly when I got in the business 18 years ago, it didn't exist. That you can get in the business now, and through creative videos and TikToks and Instagrams and Facebooks and these types of things, all of a sudden, you can be in the business for 6 months, not know anything, but you can become very well known, as a mortgage lender, right? Or whatever industry that you're in. And so that really has been a game changer. And so it's really, from a marketing standpoint, right? It's not about being the best, it's about being the most well known. And there's no better avenue than that, than digital media, social media, and getting really in tune with that, creating content, and creating good content, right? Educational stuff, which has always kind of been, where I've focused on, is kind of just that education and giving, the community the tools and resources to understand that, hey, you can buy a home, and everyone deserves an opportunity to buy a home. Maybe not everyone deserves to buy a home, but everyone deserves an opportunity. And a lot of that starts with education, and what better way to get the education out than with digital media and branding. So
got it. And wrapping things up here, Brandon, I like to leave people with like words of wisdom, or just like general tips, tricks, advice, and any buyer, seller, someone entering the market, anything that's on the mind, that you just like want to leave people with.
I would say, we're firm believers in home ownership. It's not just, something that we do, it's something that we wholeheartedly believe in. You can look at there's been tons of studies on not just finances, but emotional health, and personal development. Like, being a homeowner really does contribute to your overall happiness, certainly your potential for wealth building, and so many, and your mental health, things like that. And so we desire, and our number one goal is, if you want to buy a house, we want to help you do it. It doesn't matter where you're at on the spectrum of credit scores or finances or income. We believe that everyone should have the opportunity to purchase a home, and that's why we exist, to kind of educate, to handhold if it's needed, and be there as a resource and a guide and a true advisor for people, whether they've bought 10 homes, or they've struggled and never bought a home, and they're in their 50s or 60s and now wanting to buy their first home. So we want to be that advisor, be that outlet for people who want to get into home ownership. Again, we strongly believe it's just a fantastic tool for wealth building and for so many other reasons. And so that's, you know, that's kind of where I'd leave it. You know, that's why we exist. That's why we do what we do. And so, yeah, that's it.
Well, that's awesome. Brandon, thank you for being on the show today. If you're in the Carolinas or you're thinking about moving to the Carolinas, please reach out to Brandon at MortgageRight today. You'll see all the links down below so you can get in contact with them. And until next time, everybody.